The last trading day in March brings the first quarter to a close. And this is the day where we learn whether the deal is going to be pushed through the Parliament for Brexit. Because today is the 29th. Today was the day that we originally planned on getting that separation to go through. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. As I said, today is the day that PMA is getting another vote. That vote has just came out here a little bit ago. And yet again, the third time it's rejected. I thought all along that PMA was going to have to channel her inner Winston Churchill to get this pulled off, because you were going to need a bulldog to get down there to make this work. And now the potential of a no-deal Brexit is even further on the view, because they have until April 12th to get another plan together. Otherwise, the pips are going to hit the fan. You know, as I say, let's always let the charts do the talking as we head into the spiders. That's right, we're going to equities first. Let's let that PMA thing just kind of settle down. Now, as I explained yesterday, with a relinquished movement of safe haven assets, we saw the dollar surging, and I knew the equities markets were going to rally up. So today, yet is a rally day. We're not up as much. We caught a nice gap up here on the SPY. We're looking forward to building on these into next week. Next week is the first week of the second quarter. So time to get your head on and move on forward. This is the diamonds, the DIA. Also, a little bit of an exhaustion candlestick, but what was important today was what was important the other day is that we didn't start tacking back down lower. We're within distance now to be able to take and make new highs on the Dow Industrials. We'll be watching this at the front of the next few weeks because I got a plan for you. Now, this is the Qs. The NASDAQ 100 also caught a gap here. We didn't establish the fractal high, the fractal low rather, just yet. And this is because we did set a lower low on Wednesday's trade. Today, we just need to make sure we don't trade below Wednesday's low, and that means Monday, Tuesday, we'll be looking for a buy candlestick, the Qs. Russell 2000, rounding in our views of our major index tracking exchange-traded funds, also up on the day. Now, as part of my preview for you and what we're going to do in the first quarter, this is an exchange-traded fund called XHB. Homebuilders. Now, during the second quarter of the year, I usually shift my sentiment into watching for homebuilders because there's only certain time of years where it's really good for people to relocate their family during the summertime. So I've noticed seasonally that March, April, May tends to be pretty good for homebuilders. XHB is a basket of not only homebuilders, but companies like Home Depot. That's right. Sherwin-Williams. These are components of a housing market because those are the things that you use to construct homes, right? Let's head back into the charts on XHB. Now, as we go into these charts, I'm actually going to take you into the basket because I've set up a few trades for them this week. Here's our home builders. All right. Now, you'll notice I got a few grids going on. I did set up an idea for Pulte Homes here this week. Now, this is a seasonal consensus play. The Fibonacci's are painting a downward trend here. We're looking to get a breakout above above 29 bucks. And so we're looking for this entry at 29 to buy a $27 long call strike, targeting about $30.50 and $31. Now, this is just one of many that we'll be working with, as I mentioned before. Here's Lennar. Lennar with earnings the other day broke through some resistance. Here is KB Home. KB Home broke through some resistance a couple of days ago. So I'm going to let these consolidate before we roll back in. This is Toll Brothers. And like I said, these are not the best looking charts. We're here for a seasonal consensus play. We're here for percentages and probabilities of what normally occurs this time of year. We're also going to start backing off some of our crude oil that we were looking at the front of the year. So the first quarter was to include crude. The rest of the quarter is not necessarily going to include crude. Now, we're going to go into the pounds now and start talking a little bit of currencies. I'll keep working with you on the first quarter, on the second quarter here with the home builders as we move into next week, because that soup is not ready to go yet. So here is the pound dollar. You'll notice that we've got a lot of sharp pressure down there, right around about 29.75. The pound still has no clear recourse for ending this big, drawn-out dialogue. There's where the vote struck, and there's another 77 rip in the fabric of time. As I've said, folks, the Brexit plays have been incredibly volatile. This is not something that we've ever been able to experience as a relationship breakup like this played out in public, right? So the divorce between the European Union and the UK is going into the last stages with still no answer in sight. We don't have a new deal. There's not going to be another deal. And so the no-deal Brexit is actually the worst-case scenario. It looks like that may actually come to fruition if we don't make some type of deal by April 12th. So PMA was even kind enough to say, vote for the deal and I'll quit. I mean, come on, that's lining up really well. But if she'd have channeled her inner bulldog, I think we'd have been able to push this through. Now let's take a look at the rest of those pounds there so you can see how we're losing weight faster than Jenny Craig, dropping these pounds all over the place. Here is the pound yen. Woo! Whoopsie. Now this is trading against a weak yen, so it's only down 9 pips. The yen is historically weak today. I say historically, I just made that part up. But the yen is weak today. Here's pound New Zealand. That's 122 pips right at 10:30 Eastern. Now granted, this has been a very choppy trade. A lot of folks are terrified of trading pounds right now. And as I said, I don't blame you because we go to resistance and then go right to support, and it happens within 2 days. This is 280 pips range, down 150 pound New Zealand. Here is the pound franc. It's not moving as much, but it is down no less the pound. And this is the pound CAD right here, showing you once again that 10:30 dip definitely defined the day's range. But really, the last 2 days, look how we raced from $1.78 down to $1.73. That's 450 pips in just a few days. There is opportunity to be made out there. Mel and Anita have been able to consistently make some coin across the pounds. Here's pound Aussie with a strong metals market today. So it looked like we had divers going into gold to try and offset the uncertainty here, but you and I knew that this vote wasn't going to get approved. The other part of the conversation is euros, and euros, again, mostly bearish on the day. This is euro dollar trying to recover a little bit now. This is euro CAD to a strong Canadian dollar. We'll discuss that in a moment. As I explained, commodities are really ripping today. Here's euro New Zealand. This is a daily chart once again. Euro New Zealand down 65 pips on the day. And me, I'm all about shorting these euros. This is euro CAD. There's the 105 pip range. And Euro Aussie, these rallied with palladium coming back after being down 6% yesterday. So we'll start to round down our thoughts here, and we'll ramp up into the Canadian dollar basket because this was a really great opportunity with Canadian GDP numbers out there on a 15-minute time frame. Check this out. This is the dollar CAD, dropped in 57 pipalulas. Didn't get too much follow through on US dollar versus the CAD, but we did see a very strong move. The CAD yen, even right now, consolidating beneath 83 cents. So this was driven by a crude oil rally as well as the Australian and New Zealand dollars rally in the safe haven metals. You had gold, silver, copper, platinum, palladium, all trading up on the day, setting the stage for a rally in our commodity currencies combined with crude oil. Now into next week. Since we've gotten the no votes 3 times on this referendum, yesterday was 8 no's. What do you do next? Well, Q2, we're going to have the answers here about Brexit because there's only so much more time before they're going to draw a big line in the middle, perforate it, and start ripping it from the edges, put up big border walls in between, and then draw flashlights and point them at each other across the board. Okay, we know that's not going to happen, but still, this dialogue is going to be drawn out over the course of the next few weeks. Well, you know, this has been March, and March is in the books. You win the day, you win the week, you win the month, you win the quarter, you win the year. At the end of the first quarter, go back and do a self-assessment. How am I doing right now? How are my trades going? What do I want to improve upon? What do I want to learn to earn as we move into the next quarter? This is always a point where I go back and do a little bit of evaluation. And March was also our Market Madness month. We hope that you enjoyed participating with us in our giving to our students. It's something we like to do. We want you to succeed. If you succeed, maybe you'll tell a few of your friends about Market Traders Institute. So I'd like to invite you to provide us some insight. Go and type some comments into the chat box here, letting us know what you might want us to focus on as we go into Q2. If you have any questions, type them out. We'll grab some of your questions and bring them out here on the air to talk because we want to make sure that you have a continued understanding that we're in this to win this, and we want to hear what you think. And if you like what you see, give us a like on our Facebook page as well, because that way we know that we're giving you information that you can use to succeed. Be in it to win it here on the MTI Minute. This is Kevin Dixon. Have a great weekend, and I'll see you in the second quarter next time.